Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Wednesday. This is not a normal Wednesday. This is day one of Powell's testimony to the House Banking Committee, Humphrey Hawkins, which means that we are going to get more insight into likely the previous decision to hold on the last meeting, and we'll probably get a little bit of insight into how hawkish the Federal Reserve is and all the reasons that they might be, right? So this is not the first day is the most volatile. The first day is where we are likely to see most of the fireworks. And with that in mind, right? With that in mind, keep this shock absorber sort of analogy. If we're going to likely see a higher degree of volatility than is the norm, right? And when I think about volatility, not only do I think about it, I track it on my chart, but when I think about volatility, I think about historical volatility. I'm not talking about volatility that goes back, say, 7 periods, 14 periods, 21 periods in the way that, say, an ATR would look at it. I'm looking at a 68% probability for price movement over the past 6 months, right? What is the typical movement? Now let's take it one step further. For those of you that ask, Rog, what are those red and green zones on your chart? What are those gold and gray zones on your chart? So the red and green on the day trading time frame, the 5-minute, are the hourly price movement ranges, right? Am I going to use that today? Probably not, right? Because we no sooner get past the clearing period, the first 30 minutes after the bell, and blammo, here's going to be Powell. He's always late, so let's presume it won't be right at 10, but he's going to have a prepared statement, and we're going to start to see fireworks. Volatility. Is it going to push past the 68% probability into that 32% rare air? Probably. However, rather than looking at hourly price movement ranges, the other thing that we can do, and we will do, and we prepared for this yesterday by having a prepared watch list, by focusing on where the trends are, by looking at the index sector stock hierarchy. We want everything that is related moving in the same direction. So we have that watch list, and we're going to focus on the daily price movement ranges. Again, going back 6 months, but rather than the last 7, 14, or 21 periods, I'm looking at 6 months of data specific to the day of the week. And that's really a fantastic edge that I'll use in terms of not just volatility, but using the fact that Powell is likely going to pull the pin out of the grenade, and then asking ourselves, what's the best way to deal with that? And so that's today. And will it be as difficult or as challenging tomorrow? And the chances are no. Once we get past today's testimony and whatever the messaging is, we're going to see day 2, which is not usually a lot of volatility in terms of pushing the upper end, but we will see a number of Fed speakers now start to clean up, the way I like to look at it. They'll have a lot to say. If there was anything that when they go back and debrief, right? Hey, Jerome, how'd you do? Well, this is where they misinterpreted. This is where we need to clear up. This is where we need to correct. That's where the course correction will be. Will it be a normal week? Nope. Because on top of all this, on top of 2 days of testimony, we've got the end of quarter. 4 times a year, I look at end of quarter and think, what are all the moving parts, right? We just got past options expiration where, yeah, we have this sort of gravitational pull to very, very high open interest levels on both the put and call side. That's pretty easy to see. And we know how that works once a month. But once a quarter, much larger decisions are made with a further out time horizon ramification. Bigger decisions, more money being deployed in a certain way. And that's really, after the Powell testimony today, that's really where the next burst of volatility is going to occur. So please keep in mind, this is not sort of a normal average week. My lights just turned on. There we go. This is not a normal average week. This is a different kind of week that needs a different perspective, not only on volatility, but time frame. So I hope that just gives you all a quick idea of the way in which I'm going to be trading, at least for the next, well, for the remainder of this month. All right. Up until as we go into Friday's close. All right. So as always, gang, questions are what this show is all about. Phone lines are open for your requests. Feel free to type them on in. And let's see. Good morning. Good morning. Great to see you all. Okay. Gurneet asks, what do I think about? Oh, there we go. What do I think about VIX calls? I can't say I think a lot about them, Gurneet. I don't know that it's something that is a big part of my trading strategy. I do have on my desktop here, I do have a chart of the VIX, so I can at least see what the VIX is doing. And when we take a look at the daily time frame, right, that's probably the most often looked at. We do have HPMRs for them. So much like anything else that I'm looking at for support and resistance, I do have the HPMRs, but quite frankly, I'd be looking to short the VIX. The VIX right now is reflecting a very high degree of complacency. And these are bigger picture. I love the question. These are bigger picture questions we're asking ourselves about volatility, and I think relatedly, complacency. I think it was about 3 issues back, maybe 4, that we had a deep dive on the topic of the VIX. What is it measuring and why do we care? So if you haven't checked out This Week in the Markets, which you can check out at thisweekinthemarkets.com. I know it's a long URL, but easy to remember, right? You can check out the way in which once a week we revisit these big topics that are likely going to affect the psychology and the price movement for the coming week. VIX is a short, red structure. I don't have an opportunity for calls on the daily. However, it doesn't mean we don't have an opportunity for calls. What we want to do is separate each time frame from the next. 5-minute psychology is very different than weekly. 5 minutes very different than an hourly. It's 5 minutes very different than a daily, right? So each time frame has its own psychology. What we feel over the course of an hour on a 5-minute time frame is very different than what we might think or feel, sentiment, right, over the course of days, if not weeks, on the longer time horizon. So could we have buys on the 1 hour? So let's get specific to the time frame. Like this time frame, right? 1 hour gray zone, that would give us a potential buy. There is an uptrend on the 1 hour VIX. So that's where I'd focus on it, right? And notice the way in which we processed everything. What are we measuring? Why do we care? And then which time frame is going to set up a specific kind of trade? And again, do I want to focus on the 5-minute today with Powell at the mic? Probably not. But the shock absorption, the volatility, the ability to handle volatility on the 1 hour is going to be better. So that's the way I would look at that. I hope the process makes sense. And it's a repeatable process, right? It's one that we can say, all right, this is the sequence. These are the criteria. This is the reading on that time frame. And then we can go forward remembering that structure dictates strategy. Yes? All right. Next up, Ben asks, is AI a buy here? All right, so let's do the same process, right? 5-minute time frame today, probably not. Overall uptrend on the daily, we need a mean reversion. Otherwise, I think we can focus on the long side. Sure. I mean, look, anytime the emotion is high, the attention is high. Attention is what? It's bullish attention. And so, yeah, buying the dip probably will make more sense than not. And it's just now a matter of what kind of dip, what kind of level do we want to focus on? To what degree will we want some sort of retracement? And it's a good question. So the way I would look at this is, I think a simple Fibonacci here would be great, right? So all I would do is just pull the Fibonacci from the last major move and say, hey, let's look at about $39.50. Right? It's a really easy way to say, hey, let's cut the range in half. Yes, there's a 382. Yes, there's a 618, 786, 886, and extensions, etc. But I like the 50%, right? I call it the Pingala. So Fibonacci is based on Sanskrit poetry, believe it or not, and created by Pingala, and that's a 50%. We call that the Pingala. All right, thanks, Ben, for the question. Next up, thoughts on you. Sure. By the way, I don't have any skin in the game in you or AI. I'm just breaking down the charts. I would do something very similar. Yeah, I would do something very similar with you. I got a pop with the Apple deal, but it's fading now. I'm in from 28. Oh gosh, yes. I hope you've paid yourself and at least moved to a break even on this one, my friend. Nice trade. I'm not sure if I should sell. So anytime. So for example, when we send out an alert in the Sector Secrets Mastery, there are a few things we need to know. What's the time frame? What's the strategy? What's the entry trigger? Obviously, what is our risk? What's our stop? And then what's our target? And I think a lot of times we know what our stop is, right? PK, I'm sure when you got in at 28, you had some idea of, okay, if I'm wrong or early, which is kind of the same thing, at 28, what do I get out? What's the point of validity for the trade idea? That's the lingo I use in my head, point of validity. And if you've never thought about your stop in that way before, try thinking about it because it's a whole lot easier to negotiate, to manipulate, to massage a stop loss. Well, it was 5%. What's 5.5, right? We could walk ourselves into a far larger risk than we intended. However, if it's a point of validity, I know in my head, go wrong. That's where the trade is no longer valid. Why would you argue with the trade past that point? Okay. Then we need our target, and targets are really very much risk management. I think most people think, oh, it's reward. Kinda, because we know not to let, it's fortune cookie trading wisdom, don't let a winner turn into a loser. What the heck does that mean? How do you do that? We cannot have an overly ambitious or unknown first target. There is a point at which there's a resistance level in a buy or a point at which we hit some kind of inflection, right? Where we go, oh, makes sense for me to take a profit here, scale out and move to a break even. So I don't know what that level was for you, PK, but I would imagine having tagged 45, you probably hit it. So at very least, a break even stop, pay yourself. And if you don't want to be proactive with sort of a finish line type target, at least put a safety net, aka a trailing stop. That's what I would recommend at this point. All right. My Andres says my HPMR indicator does not work on the daily chart. Andres, it's an hourly price movement range, and therefore it's used on intraday timeframes. So if you have an HPMR, and if you bought the HPMR, I would imagine you have all the supporting material for it. It's an hourly price movement range. And that means that it's going to work up to, I think this probably makes a lot of sense, the hourly time frame. And so, yes, it's not designed to work on a daily chart, right? Because we're not measuring hourly price movement ranges on a daily. I'm measuring daily price movement ranges on a daily. So anything that's an hour or greater, I'm going to go to a different type of curation of volatility, right? Because an hourly zone applied to a daily chart really is a mismatch. Yeah. It's too sensitive to handle the kind of volatility that we would see on the daily. So it's designed for intraday trading. Okay. So next up, are we doing a Kapow trade? I don't know, Momo. Let's see what we get, right? My crystal ball's been in the shop for the entire 3 decades of my career, but we have set those up. If you're with us for one of our 3 sessions yesterday, we have the watch list. Check out the notes, and that is my plan. Let's see if we can't get those longer term hourly or daily swings. Get some of those triggers met, and then we can get to work. And that's going to be the daily price movement range, right? All right. So next up is, would I hold Tesla long term? So the question is, would I hold Tesla long term? Well, let's first of all define what long term is, because that's rather subjective, right? If someone's used to trading a tick chart, 15 minutes seems like a long-term time frame. For me, long-term is daily or likely weekly. The daily time frame is in an uptrend. So yes, is it a hold, right? Well, I'm a trader. I think about entries, I think about targets, I think about exits. So what I need is an entry. So would I like to be long? Absolutely. But do I want to be long from 274, 275? I do not. I want to be long from lower and likely around 265, 264. So if Powell sounds hawkish in the statement, if any of the replies to the questions that are asked by the House Banking Committee trigger a more hawkish reaction from the markets. And what does that mean, a hawkish reaction? If the Federal Reserve is more hawkish, they're favoring higher rates. Stocks hate that. And if we get a pullback, and if you watch my video last night, the Powell pullback, if we get one of those, Richard, yes, I'm looking for a buy on Tesla. And, that's going to apply to a lot of different names, right? Part of the process yesterday is not sort of foretelling what we're going to do in terms of which symbols will trigger, because we don't know. However, if we have a list and we've narrowed our focus down to the absolute best of breed stocks in the absolute best of breed sectors and that are in line with the broader averages, now we've put ourselves in a high probability spot because now we have a high probability watch list for pullback buys. And why would I presume a pullback? Well, it's Powell. And we are likely going to get a 1/4 point hike in July. And if we start to hear language that supports rate hikes beyond that, or a later pause, or even a later pivot, stocks are likely to throw a tantrum. But where do we want to buy a tantrum? Dip, tantrum, retracement, it's all the same thing. But we want to have that high probability list of names that are more likely to be resilient in the face of a sell-off. So I hope that makes sense, right? It's not a matter of the strategy that we use alone, right? It's really a matter of, are we applying the right strategy to symbols that are the best example of where that strategy would be the highest probability? Yes. So that's where watch list building is so important. Bearish watch list, bullish watch list. Even for some folks, I know for a period of time, especially when we have very choppy indices, what I'll do a lot of times is I'll have even a non-trending watch list, because then I know each watch list has a specific strategy or strategies associated with it, right? But it's going to be long only, short only, or wait for opportunities in the chop. And that's the way we build it out. So yeah, as far as Tesla goes, obviously Tesla then would end up in that bullish watch list. And actually it is. And then I bring up Amazon because Tesla and Amazon have a lot more in common than some traders would initially presume, because Tesla and Amazon are your number 1 and number 2 weighted stocks in the consumer discretionary corner of the market. All right, let's go up the food chain. So Amazon, Tesla, XLY, consumer discretionary, and then at the very top of the food chain, we have the NASDAQ. So yes, consumer discretionary is the number 3 weighted sector in the NASDAQ. So we think, all right, well, if the NASDAQ's heading higher and consumer discretionary is heading higher and Amazon's heading higher and Tesla's heading higher, right? Do you see the connective thread? Now, if we get that Powell pullback, thank you very much, Powell. Thank you for the blue light special. And that's how we get to work. And then again, that's the list of stocks, right? Lists like that, process like that we're going to look for opportunities in today. And that's really the focus. Again, remember, Powell hits the mic at 10 a.m. Eastern. So we have a little bit of somewhat of a clearing range, but not really. We're inheriting weakness on the open. So if you take a look at the NAS, there's a downtrend already on the NASDAQ. If you take a look at the Dow, there's a downtrend on the Dow, S&P. So as we even are looking at this market, 10 minutes before the bell, we already have the pre-market, and it's not really pre-market. I think that's a tricky word. The futures market, the Forex market, they're already up and awake. They've already had one, if not two cups of coffee, like I have. They're already awake. They're already expressing an opinion in a fairly liquid environment. And then stocks come in, and then obviously another group of participants. So we'll see what happens between 9:30 and 10. But right now, futures are saying, yeah, we're not so bullish in front of Powell, and we'll go from there. All right, gang, as always, thank you for being here for our Caffeinate and Dominate show. I will see you tomorrow, same time, same station. Be good to each other. And again, be careful. 2 days of Powell, wrapping up with end of quarter, Yahtzee. It's going to be a heck of a week. I'll talk with you soon.